Assalamu alaikum everyone, welcome back to another video. I hope you're having a wonderful day. Like I said yesterday, I am going to go over the portfolio today, and like I said yesterday in that video, if you haven't seen that video, go and watch it, where we talked about everything in terms of passive income, how much we've received this month, what companies paid us, and what companies paid us, so how much we got paid since the beginning of the year. So go and watch that video, it's quite a fun video. Today's video, I want to talk about the portfolio. And like I said yesterday, I'm a little bit late in reporting this to you guys because I have been traveling and I haven't had, I just had a laptop and a mic basically here and there, and internet was terrible at the places that I was, so I wasn't able to do actually full basically video on the portfolio. So that's what we're going to do today. So I'm going to show you all the buys, all the sales, the plan going forward, okay, and obviously share with you guys a bit of a news at the end of the video as well. Yesterday, if you're watching the market, it was a red day. Majority of the companies were down because Moody's came out and said cut some of the ratings for 10 US banks and put some big names on downgrade watch. And one of the things they said, they've put a lot of these companies basically on their basically downgrade, and then quite a few other companies were on the watch list kind of thing, review thing. And what they worried about is basically some sort of a recession coming up in 2024, and for that reason basically they downgraded some of those companies because of worries about liquidity, and these companies might not, just exactly what happened to some of the regional banks not long ago, and simply because of that everything else went down. Okay, and this is going to happen in the next few weeks or months, whatever, but as I always say to you guys, it's just a noise. Focus on your long-term plan, inshallah, by buying quality companies. So let's get started first, but before we do this, please give the video a like. It doesn't take you long, and if you haven't subscribed to the channel yet, please do, because 50% of you guys that are watching that watch the videos regularly actually are not subscribed to the channel. So please do that, it will really help. As well as that, can you join us on the Patreon account, where you will get the access to the Discord as well. And when you join us, you will have a lot more basically stuff that you can actually use for like the watch lists and so on, which I'm updating as we speak. And I'm also doing a update on the actual portfolio tracker, the dividend one, inshallah. I will be sharing that with you guys soon. And you also have the Sharia compliant investing ebook. So if you're new, maybe that will be a good start to kind of have a look at how to find a good companies, as well as obviously find Sharia compliant companies. Let's get started. Okay, so first we're going to talk about, as usual, the buys and sells, and here we go. So this month, the month of July, not June, okay, here are all the buys and sells. There was no sales, so I have not sold one single stock this month. It was actually quite nice because I have been selling one stock here and there every couple of months, but so this month I have not had any sales whatsoever, because I do feel like the portfolio is now getting smaller and getting to what I need to, something that I can absolutely look after, because it's quite hard to have a huge portfolio, and I've been keeping it between 25 and 26 stocks and so on. So Rio Tinto, I bought 4 shares of Rio Tinto. I bought 4.28 shares of AstraZeneca. I bought 1.3 shares of Public Storage. I bought the 2.7 shares of Reckitt Benckiser. I bought Nike, 1.55 shares of Nike, and then I bought Qualcomm, about 1 share, and then S&P Global, 1 share. All of these companies, every single penny that I actually spent here came from my pocket this time, because normally I use some of the sales to actually buy some of these companies, but as you can see, normally my target is £1,650, no, £1,000, but this time is £1,650, because I felt like there was a few companies like AstraZeneca, for example, that were undervalued at the moment, so I needed to buy a bit more of that company. And then when they reported the earnings, the company actually went up quite a bit, but I'm still buying it because I'll show you in a second what I'm doing, but yeah, I'm still going to buy this company. So going forward, I'm going to talk about that towards the end, why I will only be limited to £1,000 going forward, but for now that's how much I spent. As you can see here, this is the income from each. Basically these 4 stocks will pay me about £16, £12, £10, about £5, and so on, and in total that will add about £50 to the portfolio of total income going forward. What this means is, if these companies, any of these companies, for example, come out the next month and they increase that dividend payout, okay, then that means this goes up and that money goes up, and this is the yield on cost. And that's actually quite nice, basically, to, because a lot of the companies that do own are dividend growers. Okay, so companies like, for example, AstraZeneca, Nike, for example, Qualcomm, and S&P Global actually are all dividend growers, and it's nice to see that they. This basically is nice to see that they actually pay you extra every single month, even if it's 10 cents, whatever it is. When you add that up for the long term, it's actually quite nice. Okay. Right, so that is the buys and sells. So not much of a sales. Now let's look at the portfolio individual stocks, and then I'm going to talk about a couple of things in terms of diversification and so on. Okay. In fact, we're going to start with the diversification of the portfolio. As you can see right now, technology is 24%, because this will explain what we're going to talk about a bit later. Okay, 24% of the portfolio is actually just technology. 24% is now industrials. Okay, in fact, we're going to talk about this now. Industrials, let me show you the companies that I own in the industrial sector. Okay, so if we go back to the holdings here, you will see all these companies are the industrial sector. Okay, and that includes automatic data processing, Cummins, 3M, UPS, and then Union Pacific. Every single one of these companies, I've been buying them heavily lately, especially air product, automatic data processing, as well as UPS and Union Pacific. These three companies, I've been buying them heavily, and I actually didn't think about the diversification of the portfolio at that time, because they were very, very undervalued at the time. And now, as you can see, technology, because I stopped buying technology for a while, and because of that is now, look, 24% of the portfolio. Hence why I'm not buying any more of these companies. So I'm going to leave them alone for a while, even though this one is down about whatever it is. Right now, I've got 30 shares, and that's 4,000 something pounds. I think when you look at the overall portfolio, is now the basically fifth company in my portfolio. And that's interesting, because I didn't actually think about that at all when I was doing this, but it's fine. I really like those companies, so I'm definitely happy with the fact that they actually on the top 10. Look at Union Pacific. Union Pacific used to be, I don't know, 1, 2, 3%, but right now it's, because it was so undervalued, and right now it's up at 12% and so on. I'm going to keep it there. I'm not going to touch it for a long time. So let's move back. Now, looking at the others. So I'm not adding to the industrials for any time soon, and I'm not planning to add much to the technology. Okay. But if they're technology, the only companies that I'm going to add is this. Okay, Qualcomm. Qualcomm is down quite a bit, so I want to get to at least 40 shares or so. So will be adding to Qualcomm, but I don't think the rest of them. Looking at, for example, Cisco, it's gone up a little bit. Broadcom, I'm not touching this company. I'm not going to sell. I made the decision now. I'm going to stick with it. Although I'm up £2,273 right now, I'm going to stick with it, and I'm not going to do anything with it. ASML, I would love to add to this company. They're like 2 more shares, but it's just, I feel like it's getting a bit expensive right now. I'm just going to wait for a bit. But yeah, and Microsoft, I haven't touched that company for years, and I'm just going to leave it as it is, because this company has so many moving parts right now. It's still, with the AI situation, I wanted that to settle first and then see where we are, inshallah, going forward, before I make any decisions on that one. And then we got healthcare. So the companies that are in my healthcare portfolio. So let me quickly show you the healthcare side of it. It's got actually quite a lot of companies in the healthcare. Okay, well, I say quite a lot. It's 4 companies. We've got AstraZeneca, we've got J&J, we've got Merck, and then Medtronic. Medtronic is the only one that I feel is undervalued. Well, the 2 that is undervalued is AstraZeneca and Medtronic right now. J&J is fairly valued right now, but it's getting, I don't know. I'm just going to wait for a bit, maybe to see a bit of a drop. I don't know what I'm going to do with it. But Merck, whatever happens, by the way, I'm not selling this stock. And when they do the spin-off, I think we have to make a decision very soon whether we want to keep our shares or to get some Kenvue shares. And I'm definitely going to keep mine, because I do like J&J as it is. If I like Kenvue, I will also buy some shares of that in maybe later on in life. But right now, I'm going to keep it as it is. Okay, that's the plan. But I might change my plan. You never know, but that's what I'm going to do, inshallah. So when it comes to healthcare, these are the 4 companies, and every single one of them, actually the 2 that is undervalued right now is AstraZeneca and Medtronic, and both of them are actually so undervalued. Look, this company recently almost went green, and it came back, and now it's like almost 12.5% down. So I'm just going to keep it, inshallah, and see what happens going forward. Financials and consumer staples is another one. So the consumer staples, I do have some really good companies, but I wish I can add a few more, because I do like that consumer defensive kind of companies. Because if you think about it, this is the companies, every time you go to those supermarkets, what do? You just buy their products. You don't really even think about it, whether we're in recession or not. Majority of people will go for it, although these days more people are going for the Asda brands and, I don't know, Tesco brands, rather than buying like Procter & Gamble stuff, right, or Unilever's. But it's still, people actually like their products, and they have a pricing power as well. So when a recession happens, if it happens, especially in the US, UK, we definitely in a bloody recession, but they will be fine. They would have absolutely nothing to worry about. But I like all of them, and right now the only one I'm buying is this one here. This one I've got about 100 shares, so I'm just gonna leave it as it is. The rest of them, the other two, this one here, I might buy here and there if it comes back down again. Right now it's 157, so I'll see how it goes. Okay, I'll see how it goes inshallah. Financials. Now financials is basically 9%, because financials now includes Visa. So Visa is now being included in the financial sector. Well, rightly so, because it is one of those. I don't know what happened to Visa's. I need to check the dividends there. Something happened to the formula here, but yeah. So financials is just these two companies are great companies, dividend growers, absolutely amazing. I'm going to keep them. I'm going to add to them as much as I can. I would love to own about 20 shares of S&P Global and maybe 30-40 shares of Visa. So these two companies will be in my portfolio for the long run, inshallah, going forward. Materials is a different, I don't know how I feel about Rio Tinto, but I think going forward, because of that income side of it, I'm just going to leave it for now. But they cut their dividends and so on, so I don't know, in the long run, I might have to get rid of it and maybe get a high growth company in there, and then later in life, when I'm actually ready just to receive income, then maybe buy it back or so. But right now it's okay. It's actually not down much and it's doing okay. The dividends is great, so I'm gonna keep it. But I really like Air Products and Chemicals. I wish I could add more of this company. I do still feel like it's undervalued, this company, but because I'm up so much, let me quickly show you. In fact, you can just see it from here. Why do I need to go back? Right, you can see about 13% up. So for that reason, I think I'm just going to keep it for now and just let it be. So, and then we got two more sectors. We got consumer discretionary. So we've recently added Nike to this. So we've got Home Depot and Nike. So Nike is now about, how much is it? Yeah, about £1,000 right now in there. Okay. So overall, I really like Nike. I really like Home Depot. Home Depot, I think it needs to come down a little bit. But Nike, I will be buying it weekly, inshallah, as we go forward. I want to build it. Although I have it in the family portfolio, I want to like to build another maybe 30-40 shares of this company in this portfolio, as well as the family portfolio. That's how much I like that company. And then finally, we got real estate, and there's only one company, and this is the company. Okay. Basically public storage. I've got about 13.3 shares of this company. Right now it's down about 11%. The dividends is actually quite nice, so I'm going to keep this one here for a long time. And finally, where we got that ETF. I haven't the ETF. I haven't done anything with it. I really haven't, like, for a long time. 26 shares. It's been sitting for 26 shares for a while. It's now up 10%, almost 11%. Is that basically a steady Eddie kind of situation going on? It doesn't do much. It doesn't go down a lot. It's doing what it's supposed to do, and is going up basically a bit. I'm gonna do an update of all of these ETFs soon, inshallah. It's been a while. I think it's about 4 or 5 months now. So I want to look at the total returns and things like that for all the ETFs. So I will be doing that. If you haven't given the video a like and you're enjoying it so far, please give the videos a like. It really genuinely helps the channel, okay? And join us on the Discord and so on. So yeah, I will be doing an update video on this, but yeah, it's still there. I haven't done anything with it. But yeah, there you go. That's the entire portfolio right there. So individual companies that I want to talk about right now that stand out. And the first one is 3M. 3M, I'm like I've said to you guys, I'm going to get rid of it. The growth is not there. The dividends, I'm worried about. They might cut it soon. The law situation, basically the lawsuit situation is still that ongoing. They've got two things going on. They've basically, when it comes to lawsuit, and that cannot be easy. Okay, I already have a J&J which is also going through similar sort of a thing, and a judge recently actually rejected their basically what they wanted to do. But J&J, I think, will be fine. The one I'm worried about is 3M, because they might cut the dividends and so on. J&J is basically AAA company. The United, basically, it has a better rating than United States. Okay, right now, the United States, what, AA plus or whatever it is, they've been downgraded recently. But when it comes to the J&J, this AAA company, so I have nothing to worry about with this one. But it's this one that I'm worried about. So 3M, as hopefully it will come back down. If it goes half this, basically, if it goes about 12%, 13%, basically loss, I might take the loss and buy another company with that money, because right now it's costing me a lot of opportunities, because I could use basically that 3,000 plus money somewhere else where I could potentially make double digits, inshallah, moving forward. Well, but we'll see. We'll see. The other company I want to talk about, like I've already said, is Broadcom. I'm not going to touch this company. I'm going to leave it as it is. I really genuinely like the company. I wish I bought more when it was really undervalued, but now it's gone up so much. I'm up quite a bit, almost 90% up, but I really like the company, so I'm not going to touch it. Right, just a couple of more things that I want to talk about so right now, as you can see, we have basically added 7,881 pounds. I still have about 12,000 pounds left. I've started a new project. So while I was on holiday recently, I've basically come across a really good opportunity. I'm going to share this guy with you guys soon, inshallah. Well, it's going to take a while, but I will share with you whenever basically I have a good news, okay, to share it with you guys. But I will be sharing that definitely. Like I've always said to you guys, I'm going to be basically honest and transparent with everything that I'm doing. So what I'm going to do is now I'm going to restrict myself, because I need cash in order to basically start that project. So I will be spending only £1,000 a month. So carry on what I've been doing before, which was add the £250 a week, and then if there is excess money left, then I will add to the portfolio. So but what I'm gonna do is, no matter what happens, by the end of basically before we get to the 6th of April 2024, I will max this account. Okay, I will make sure that I've used my entire £20,000 for this account, and after that I'm not going to add a penny to this portfolio. I will reinvest the dividends and things like that. Okay, just is gonna that way, but I'm not adding it. So I will be putting my ISA account money to somewhere else, but I need to find another account, because by the time I max this account, if I'm gonna add another, say, £12,000, this account will be closer to £100,000. Okay, and as you know, basically, if God forbid, if anything happens, you get about £85,000. So I'm gonna leave this account alone. I'm gonna open another ISA account for that, basically for 2024. Then I'm going to carry on with that one and leave this one alone and let it grow. And that's the plan, inshallah, moving forward. So that's what I wanted to share with you guys. But I will be adding only £1,000 going forward. Some months might be less, some months might be more. But in the end of the day, I'm going to try to maximize my ISA account, inshallah. So that's the one thing that I want to share with you guys. And also, when it comes to that news, I will be sharing that with you as we go along. Whenever I have a little bit more time, with a little bit more information. The other thing I'm going to do basically tomorrow is basically update my entire watch list for the month of August to October, and I will be sharing that with you guys as well. So all the companies that I will be buying, and basically the prices that I'm buying it for, and the margin of safety that I'm going to take, and so on, my entry point and so on. So as usual, I'm going to share this with you guys and basically show you everything that I'm doing. All I'm doing here is not giving you financial advice, guys. I'm trying to basically be honest and transparent with you guys, so at least you have some information to start with, okay? Because this is what I needed when I started this portfolio. Someone to kind of say, okay, these are the things that I'm doing. These are the Sharia compliant companies. Go away and do your own research and do your own thing. That's all I needed. I didn't get that. And that's why I started this. So please join us on this journey, inshallah, if you can. Like the video, subscribe to the channel, support us please by actually sharing everything we have basically sharing here, and join us on the Discord if you can basically £5, and you will get all access to all of these things, inshallah. Have a wonderful day. Assalamu alaikum.